absolutely bleeding, miserable red morning this morning. It is, of course, all about the Trump tariffs, and I want to take the next, say, 15 minutes or so to walk you through what actually matters. Not run you through the headline numbers, because you've seen those, but actually give you some insight into what this means and where the opportunity lies, and I'll got a nice little surprise for you there as well. Now, the good news is that Winston is taking it in his stride. He's not too worried about the whole thing, but let me walk you through, there he is, what we got in store for you to make sure this is max value for you, the kind of briefing you get if you're working on Wall Street. That's always my intention. So the first question is Wall Street actually surprised? We need to answer that. How bad can this get? How much lower can we go? I'm sure many of you are thinking that today. If you're thinking that today, by the way, just put a 2 in the chat, and I know you're thinking about that. What about job cuts? Are they adding to the fire? It's a story that's getting a little bit forgotten here. And is there any good news? There must be something, surely, right? Let me see if I can dig something up. And let me ask a question and answer it for you as well. What if this doesn't matter that much? Seems odd today, but I'll explain. And where there is a crash, there is opportunity. I want to focus on that a little bit today because, okay, a lot of twos here. Loving that. Because every crash is followed by what? A recovery, a rally, right? So there is an opportunity here, but we need to know, we need to position ourselves, and we need to train ourselves to spot what is the opportunity here. Because it isn't just the whole freaking market, I can assure you that. And will the Fed bail us out? I'll tell you when we're going to find that out. And before you buy, check this. I'm going to give you one simple thing to check. And we're then going to look at some of the popular stocks if we can bring ourselves to do that. And then we're going to run a Q&A, or as I call it, a therapy session, because I think that's probably what we need today. Does that sound good? If that's going to deliver value to you, right? Value in the chats. And I know this is something that'll be useful for you. And Winston and I will put up more of these. And Winston is, Winston? There he is. He's thinking, can you wrap this up so we can go and play with my ball, please? So we're going to do that. We're going to run through this in as quick as humanly possible to make sure you get max value from this. That is entirely my intention here. So let's jump straight into it. Okay, loving all the values there. Thanks, guys. A lot of values there. Okay, brilliant. Okay, so headline, right, from Bloomberg: Trump tariffs set to wipe out nearly $2 trillion from US stocks. They're guessing the market isn't open yet, but they're not that far off. This is a pre-market. Nvidia down 6%, Apple 7.7%, Meta down 5.8%, Amazon down 7%, Tesla down 6%. These are not even the bad ones. I mean, there is worse in there, and it's just across the board, absolutely everything, with the exception of a little bit of safety fleeing into the likes of Philip Morris and Procter & Gamble and Coca-Cola, the sort of addictive drug pushers out there. But very, very little. I mean, if you've got something green in your portfolio today, you're one of the chosen ones. That's for sure. So now, was Wall Street actually surprised? This is from Goldman Sachs, the bankers with a heart, some of the smartest investment bankers out there. It doesn't take a lot, but you know what I mean. In all seriousness, they are probably the most prestigious investment bank out there. What do they say? This is their summary of this, and they're saying not good. This will hit GDP growth, push inflation higher, keep pressure on US stocks. Uncertainty has not been tamed. With what we know right now, we are clearly looking at a very challenging day for the US stock market tomorrow. Feels like a down 4%-ish type of session. We don't feel that much better now, do we? Nicht gut, as some of my Germanic friends are writing in the chat here. Exactly. So, okay. So we were surprised by just how bad this is, right? But how bad can it get? Well, sorry to show you this chart. These are some of the bigger drawdowns in recent history. And at present, let me get a pen you might actually be able to see. At present, we are here, as the French would say, right? That is you, or rather the stock market. And as you can see, we've gone lower, right? This was 2020. This was 1987. This was 2022. This was 2007. This was 2000. I'm not suggesting, by the way, this is a 2000 type event. I'm not suggesting this in any way, shape, or form because the economy is in pretty decent shape. But you could see how we might go somewhat lower, right, than the minus 10% we are right now. We might be minus 14% down by the end of today. So what do we do next? Well, you'd think the economy is strong. That's a good thing. Well, there is just one person who's cutting jobs faster than anybody. And that, of course, is Elon the Musk. And he has cut extraordinary amount of jobs, 200-something thousand at federal workers. And that's what's spiking here unemployment. Kind of feeding into this slowing economy story, right? It's like we've never seen a government try to do so much unpopular shit so quickly, which is, I think, why the market's surprised. They're like, hang on, I thought we donate all this money to you guys. You just keep this machine rolling. And they're like, no, we don't care. It's a very, very unusual setup. Now, is there some good news? Yes, there is some good news. Well, first of all, to understand really the tariffs, you got to break it down by area. So the Americas, as we shall call it, basically tariffs are, as expected, on the lower side. Canada, Mexico weren't part of this round. What about the Europeans? Well, they're in line. Actually, Americas gets 2 ticks because we were lower than expected. Europeans were as expected. Asia is what got really, really, really hit very, very hard. Countries like Vietnam and China and, that whole space got extremely hammered. Taiwan also. But there are exceptions. There are exceptions. Steel and aluminium exceptions. Auto and auto parts exceptions. Copper, pharmaceuticals, semiconductors and lumber, bullion and energy and other certain minerals are exempted. So say to me why Nvidia is down 6% this morning, when there is a specific exception in there for semiconductors. Doesn't make a lot of sense, does it? And that's the opportunity, of course, is that there is opportunity in this, but we don't want to be too early to it either. Don't forget the Falkland Islands. Yes, apparently the penguins need to pay something. Now, so what if this actually doesn't matter all that much? Do you know what the US economy actually looks like? This is the US economy, slightly potato-shaped. Now, 70% of that is you, the consumer, consumption. The US consumer drives the vast majority of the economy. As long as you guys go out and you swipe that plastic, it's all good. Nothing else really matters. And then imported goods and services are only about that much, 14%. Really not very much. So in the scheme of things, and I know the headlines are screaming and everyone's panicking and this is mainstream media and everybody trying to get their clicks, but this isn't actually all that much. So this isn't going to collapse the US economy. We're not going to see the greatest recession of all time. We're not going to see queues of unemployed people. Large companies like Microsoft and Meta and Netflix are not going out of business. Walmart isn't going out of business. Amazon's business model isn't over. No, that's all noise and nonsense and fear. And that's your opportunity. If you understand that, if you understand what actually makes a fundamentally good company, and then you take the opportunity that the noise and the fear brings, and that's when you strike. And that's when you make a lot of money. And that's when you accelerate your journey towards early retirement significantly. So where there is a crash, there is opportunity. Just look at fintech stocks. Explain to me how fintech is affected by tariffs, right? Say your SoFi, your student loans and mortgages and that sort of things. There are no tariffs on student loans or mortgages or, online trading or any of that. What about domestic software? What about something like Palantir, right? Predominantly in US business, US commercial, US government. tariffs don't feed into this. Actually, they might benefit from tariffs because companies with complex supply chains might now spend more money on Palantir. So there is opportunity here. And I want to do something for you. And I was working on something I was going to make available to some of you guys probably in about two or 3 months, because I was just starting to work on it. But given what's happening here and giving the many messages I've been getting from you guys in email and on Twitter, and obviously also in our community, I'm going to pull this forward for you. And I've been working on this all day, and I'll work on this all day tomorrow and all day Saturday, so to make sure we're ready for you. So I'm going to run for you a live educational session. And it is literally this. I want to teach you how to pick great long-term stocks. So you bounce back from this crash, you retire sooner, because these things are golden freaking opportunities, right? That's really what it's all about. And there is an element, of course, of protecting your money. And, we talk about that a lot here, which is what I pinned it to the top of the chat here, actually. It was TJ Pitt. You wrote, "Thank you very much, Felix. You've already saved me over $100,000. Please give Winston my regards," which I shall. Here he is. Winston, you hear that? Yes. And that's obviously part of it. It's just to actually help you guys out. So let me put that link for you in the chat here. And I will pin that to the top of this chat. You can sign up there. We'll take 1,000 people. It'll be live. We'll probably go for 2 hours, maybe an hour and a half, 2 hours, depending on how many questions you want to ask me. And I will give you the actual criteria that the most successful stock investors look at. And that separates for you, purely with facts, the noise from the really good companies, because there are a lot of really good companies which are on sale right now. But don't rush quite yet into buying them. Just come and join me on Saturday there. That's 11 a.m. New York time at felixprehn.org/webinar. And I'll literally teach you how to pick great long-term stocks. And it'll help you retire sooner. It'll help you retire better. And it's like literally messages like this that make me do this. Like, see, Daniel, you wrote to me this morning, "Felix and Winston, I'm so happy I listened to you, sat on my hands. Thank you, thank you, thank you, thank you, thank you." And we've been having a lot of chats and calls with our students over the last couple of weeks to talk them over quite a few ledgers here. And here I screenshotted that one as well. So Garden Therapy signed up. Brilliant. Let's go. So if you're joining me on Saturday morning, right, let's go. Like Garden Therapy has here in the chat, and I'll know that you'll be there, and we're going to have some fun, and we're going to make your portfolio great again. Is that slogan overused yet? I think it probably is on a day like this, right? So brilliant. If you're in, yeah, right. Let's go in the chat. If you're joining me on Sat, and I will teach you how to turn this into gold. This is a golden opportunity. I woke up smiling, honestly. I looked at this and I was like, Winston, this is freaking brilliant. Yeah, so, we focus a lot on the trading community here. I get that because I enjoy that, sort of my passion. But more than half of my money is in long-term stocks. And therefore, I also, study that. I've got a lot of mentors in that space. So we know what works. And I'm gonna teach you that. I'm loving all the let's goes there. Brilliant, guys. So will the Fed bail us out? Well, there is one thing that I'd watch out for, and this is a screenshot from our Trade Vision, and that is tomorrow, at the auspicious hour of 11:25, not 11:20, not 11:30, 11:25. The man is precise. Fed Chair Powell speaks. Listen to what he says, or at least read a summary of it. I'll give it to you, of course. And that will be our first indicator of what does the Fed make of this? I mean, we're also getting Jefferson speak today, Cook speak today, but there are the lesser Fed presidents. We're looking to the chair. We're looking to the anointed one himself, and that'll be at 11:25 tomorrow. So let's check that out. Loving all the let's goes here in the chat, guys. I look forward to seeing you there on Saturday. We're going to have some fun with us. And actually, just make investing fun, make retiring fun, make the money work for you so you can quit the wage slavery earlier, and you don't let crashes like this derail your plans, right? That's the worst thing. So people work like 20, 30, 40 years, and then boom, they're about to retire and something like this happens, or something worse than this happens, and they get derailed. And I want to avoid that. Now, before you buy anything today, look at this chart. And this is the VIX chart, and I'll put it up for you live here. Here it is inside Trade Vision. And what have I been singing from the rooftops for a while now? I've been singing for the rooftops for a while now that a VIX below 20 is one that we can live with. So let me literally write this out. So I'm going to write in here, below 20, okay, right? And then up here, if I may I? Tricky sometimes. Above 20, panic. I don't mean to actually panic, but that's what it's saying to you, that the market is fearful. So what do? We don't buy when everybody's panicking because it is an indicator that it's likely to go significantly lower. It doesn't have to, but it's likely to go significantly lower, and we like our odds. We like to invest the money that we've worked for and sweated for and, done things for that wasn't particularly fun, entertaining, and took a lot of our living life out of us, that we preserve that money and that we don't buy into the dip early. We buy into the dip a little late when it's recovering. That's the important thing I want to get across to you here. So if you only learned this one thing today, I'll be very, 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 very happy. And above 30, replace undies. Well, actually, above 30, we start making money out of this again. But that's a whole nother world we don't need to get into today. So, shall we have a look at popular stocks and do a Q&A therapy session, a session even? While we do that, while I put open some stock charts for you, sign up for the first ever, literally, long-term stock investing seminar, webinar that I've done, and I'm going to teach you how you pick amazing long-term stocks. There are loads of them out there that are amazing, and they're cheaper now than they've ever been. And therefore, as we recover from this, we will recover from this. The market always has. It always seems terrible at the time, but it always recovers. It always rebounds. You will own some truly extraordinarily wonderful businesses that will help you grow your portfolio faster, retire sooner, retire better if you're already there. So come and join me on Saturday at felixprehn.org/webinar, and I'm excited to see you there. So shall we look at some of our, maybe you don't want to look at stocks. Maybe you don't want to look at stocks because this is what it looks like. We could just look at Winston. Winston, what do you think? Yeah, that's better, isn't it? Any stock tips for us, Winston? He's like, no. Give me tennis balls. I'll give you stock picks. There he is. So in all seriousness, be as relaxed as Winston. It's a good life. But let's look at some of those picks. Let's look at some picks that make some sense, right? So Apple is down. Well, AAPL, they make a lot of the stuff that they sell in places like China and South Korea and Vietnam and so on, right? And therefore, I can actually see why the stock is down, because Asian countries got hit really hard. So we're down here like 6% or something, like compared to yesterday's opening. We're down 7.3% here pre-market. So not pretty, right? Trading at $207 right now. Ugly, 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 ugly. Now, what about something like Walmart? Why is that down? It's a very domestic company, isn't it? Well, yeah, but they probably sell quite a lot of stuff that's made in places like China and Bangladesh and Vietnam and, cheap garments and so on. Stocks like Nike are down, right? Why? Because pretty much every trainer sold in the US is made somewhere overseas, and every polo shirt and all that kind of stuff. It's all foreign made stuff, isn't it? Bloody foreigners all around us. There is one here too. So I understand why that's down, and that's one of the reasons I always say, falling stocks and so on. Now, how about something like AMD? Right? Stock I've been bagging for many, many, many months. Right? It's down 5.5%. Why is that down 5.5%? Is it because NVIDIA is down significantly? Almost 6% here. Now, did I not mention that there is an exemption for semiconductors? Yes, there is an exemption for semiconductors, like blanket exemption. You can bring them in, you pay no tariffs, because the US doesn't really make very many semiconductors, so they have to bring them in from Taiwan or wherever they're made. So why is this down? Does anybody know? No, it's just general panic. It's just general panic, right? Now, Lisa says Ford is not down. Is it not? It's down 2%. Yeah, not as bad as you'd think, right? Not as bad as you'd think. Well, why? Well, there is an exemption for auto car parts. So, the unions are very, very strong. Let's look at GM, down 2.8%. And then let's look at the most American car maker there is. 70% of their components are from the US. 100% of cars sold in the US are American made. It's down 6%. Does that make a lot of sense? Does that make any sense, in fact? No. So that's where the opportunity lies. I'm not saying run out and buy these stocks. I'm just saying there are disconnects here, right? Or how about, fintech, right? Your student loans subject to tariffs? No. So why is SoFi down 9.4%? Anybody tell me that? Anybody tell me why it's down that much? Makes no sense, right? Makes absolutely no sense whatsoever. So there is a lot of stuff like that out there. Even the big financials like JP Morgan is down, right? How does that make any sense? Down like 4% or something. It makes no sense whatsoever. The economy is still there. The US economy is still there. People are still, banking. JP Morgan is still running the world. So a lot of these don't make any sense, especially in the financial sector, I'd say. And I think also particularly in the energy sector. We got like a simple energy ETF. Do they trade pre-market? Yeah, so it's down pretty hard here, right? Again, does that make a lot of sense? No, not really. Not really. It just really doesn't. It's just fear. Hood is another one, yeah. Are people going to stop? Well, actually, Hood, maybe. Why? Hood is a very different business model to, they say, SoFi. Hood makes money out of order flow. So you need to be trading a lot for them to make money. When the market goes down, retail investors and traders, they buy and sell their stocks because it just doesn't feel good, and therefore their earnings go down. Which is why Robinhood is trying to sort of rebrand as a bit of a bank. So that actually possibly makes sense. The market drops, Robinhood should drop. Why is Google down? What's Google's core business? Anybody know? What's Google's core business? It's advertising. Nothing else. It's advertising. It's not technology, it's just advertising. So is the US economy going to crater this much? Is it? You think so? Does that make a lot of sense? From the highs that we had up here? That zigzaggy thing there, by the way, can you, some of you guys, you're my students, you recognize this, right? As a nice little pattern. That's a real textbook one. We should use that for something. But we're now off 27%. Is the US economy shrinking by 27%? Is advertising revenue falling by 27%? Is there an opportunity there? Possibly. Maybe not the biggest opportunity, but there's definitely opportunity there. Do you shift to bonds when the market panics? You want to shift to bonds before the market panics. Otherwise, it's a little late, I would argue. So I do it before, when rates were really high. Yes, I was buying bonds because we knew they would print money. Right now, I'm not in any bonds. I don't think I have any bonds at all. What happens if we get a bad NFP report tomorrow? He's talking about a jobs data tomorrow. Well, it might feed into the Fed's playbook of maybe we could cut rates a little sooner, right? Now, if you think this through, what is Trump actually trying to achieve? And obviously, some of you think he's just a complete madman and all of that, and that's okay. But if we look a little bit beyond that, what are they actually trying to achieve? They're trying to achieve lower interest rates. And when Trump came into power, was it somewhere here in February, interest rates, this is the 10-year interest rate, was at 4.6%. We just dropped to 4%. That's a big drop. That's a big decline. And why does that matter? And what's it all about? So this is a 13% drop. Because what are they doing this year? Well, they're going to refinance your debt, American debt. If I'm not mistaken, it's $9 trillion. this year is due, this has to be refinanced. Nobody's got $9 trillion lying around. So there has to be refinanced at today's interest rates. So if you can bring interest rates down by a percentage point, what's a percent of 9 trillion? 9 trillion is 9,000 billion, right? So that's 91% lower interest rates would be 90 billion per year, right? So say over a 10-year time horizon, that is what? That is $900 billion. It's almost $1 trillion you would save by cutting interest rates by 1%. And they don't need the Fed for that. They can just do it through the bond market, which is what they're doing. How do you achieve it? Tank the stock market. Literally, tank the stock market. That's all you got to do. And everybody flees into bonds and bond interest rates drop, and they're now at 4%. So that's what I'm looking at here. Right? So that's the rationale behind this. If you think there is a rationale behind it, if you think that there is madmen running the world, then that's also okay. Now, why did CoreWeave go up so fast? It's just speculative nonsense, honestly. I wouldn't touch CoreWeave with a barge pole. This is not something you want to be buying. This was basically a failed IPO. So therefore, I would not go anywhere near it. But yeah, it's just, usual madness. I don't know. I have no idea who's buying this. It makes no sense to me. Would you move your 457 retirement account from stocks over to stable funds? I don't really want to answer that because A, it'd be kind of financial advice, and B, I don't know your situation. I don't know your long-term plan. I don't know how you're set up. I don't know what you own. You kind of need to make a bit more of a detailed plan there rather than, I love that you're asking the question, but it's probably something you're going to want to sit down with somebody about. Should we ignore stop losses today? No. No. I was having a chat yesterday with my mentors and who look after a lot of you guys who are in our community, and they were saying the most popular question this last week has been how do we adjust stop losses? And the answer is you don't. That's what it's there for. Carlos, I appreciate you. Thank you very much. You see euro US dollar jump. Yeah, you'd expect some dollar weakness here. You'd also expect Asian currencies to get weaker on this. Questions of the stop losses there. Said that. Hello there, my Canadian friend, Star 87. Sky Studio, buy or sell. It's not that easy. It's not that simple, rather. It's about what do you buy, what do you sell. That's really what it depends on, and that's why I'm running a live session on Saturday with you guys. We're going to look at some actual hard rules because that's ultimately how you make better decisions while the market is doing its thing, which opens in 1 minute. Let's have a look at the QQQ here at 456. Ouch. Let's see where the resistance is for a moment here. It's at 450. Okay, so it could get interesting. And yeah, you can't make a snap decision like you can, but you don't want to make snap decisions in the moment like this. You want to have a plan in advance that you stick to, that you trust, because you understand that it works. And then in moments like these, you probably want to have somebody you can actually talk to, right? And I'll just put something in the chat here because it's going to be a little bit too quick. VIX trades, here we go, says John. Yeah, they're going to make us some nice money, right? They're going to make us some nice money. I mean, not today, but they'll come down. It always does. And then as we get a little bit closer to expiration, we're going to make a lot of money on those, which is good. Michelle, I'm your daily sanity. Appreciate you, Michelle. What's the unit of VIX? Yeah, it's basically a dollar amount. But really, well, it's not really a dollar amount. It's the underlying is a bunch of futures contracts, which basically tell you how much the market's going to move by. It's a bit complicated. It is a bit complicated, I must say. Right. The NASDAQ opened and is now at 457.46. SPY is trading 3.4% down at 545, below its support level for the week, or really its support level overall, which sits here at 550. So we might see a little bit of pullback towards the 550. Ideally, we close above that. If we don't, oh well. Inverse ETFs, it doesn't make a lot of sense because you can click a sell button, right? So it's the same thing. If you use an inverse ETF, you're shorting. Why not just sell the bloody thing outright rather than pay for ETF fees? But yeah, I wouldn't. I wouldn't short it because this isn't a sell-off because earnings are bad, the economy is failing, or, Enron collapsed, or, one of those type big events. This is a sell-off because there is fear and there is uncertainty. Very different. Why do we sell off? Because Donald Trump spoke yesterday. You could speak again today. You could tweet today and the whole thing flips. So you don't really want to be betting against the US economy when one tweet could make you lose money. Like, what's your edge, right? Like, what are you going to gain there? So just don't do that. Just don't do that. Daniel, okay, you're more or less fully in cash, and that's good. I'm sitting on quite a lot of cash. The rules are always the same. The rules are always the same about what actually defines a breakout. Like, this isn't it, right? We're somewhere in a sell-off. So look at some of the big stocks here, like not NDA, NVDA, where we gap down again here today, right? So this is not over. And then you look at the fear index, and that's significantly above 20, where we're kind of comfortable. Below 20, we're good. At 26, we're not buying stocks. It just doesn't really make any sense because there's a very high chance this is telling you that it could go a lot lower. Joel, my friend, you say, I wish I would have been watching your vids since January. Sorry about that, my friend. But sometimes, the Lord moves in mysterious ways, and this might be the way it has to happen for you. So obviously, I don't know what you own, but I wouldn't blanket sell random stuff. I definitely wouldn't be buying stuff blanketly today. I would start to make that plan to very selectively identify the great companies that are unfairly trading at a discount right now. And then when we recover and we come out of this, which we inevitably will, every crash is over. And there were some bad ones, right? There was COVID, and there were, bank failures and Enron scandals and housing markets collapsing. I mean, big things. Here we just had a guy hold up a great big, piece of cardboard. Fundamentally, the US economy is still there. And the US economy isn't actually that trade connected, weirdly. The US is a fairly sizable consumer, but it isn't that big a deal. Do you teach options, says Drew? Yeah, of course. I'm an options trader. We have 2 levels of options programs, actually. So yeah, sure. Just check it out. How about shorting VIX? Yeah, you just got to be careful with that. That's it's a bit of a pro move, and I don't normally say you shouldn't do things because you're a beginner. But can you see this spike here at 65? So the problem is, if you short here now, what if it goes to 65 or to 80 or to 100? Will that blow up your account? There is a chance, right? Now, are there ways to protect yourself against that? Yes, there are. So for example, and again, I'm not recommending it, but I own some $80 call options up here, which protect my negative, sort of VIX position, because I think it's going to come down. It just has to come down at some point. But you don't want to be doing that if you don't really know what you're doing, because it is one of the more complex things you could be doing. This has blown up a lot of funds over the years. Many, many, many. I talk to my mentors there, they'll all tell you about half a dozen war stories of people literally blowing up big, 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 billion-dollar portfolios. Paul King says, what does Trump's melt up? It's the order in which they prioritize policies, right? So had they started off, done the tax cuts first and the deregulation first, we would have a tremendous rally now, right? We'd have the most beautiful market in the history of them, that kind of thing. But they're starting with pain. They're starting with going against the established system and order and firing people and shutting down things and, doing that kind of thing. Reducing immigration has an impact. And then they're announcing the biggest tariffs we've had since, I don't know, the 1920s. So they're doing all the painful things first. I don't know why. I guess that's policy. I guess they only have really 2 years to get this out of the way. So you might as well start really, really quick. What follows next? Well, people will get over this. People will absorb this. Companies will still be there tomorrow. Maybe the tariffs will come in a little bit lower. There's a lot of stuff in there, which is actually quite important, which is that the 10% flat tariff. So the 10% tariff kicks in now, but the reciprocal tariffs, so the stuff on top, kicks in later. And that's probably designed to give some room for negotiations. So we might see not companies, but countries cave in, right? The governor, whatever he is, of Ontario has said, hey, I'd like zero tariffs with the US. We don't tariff you, you don't tariff us. Let's all be friends. And Scott, yeah, I think you're right. The political window is pretty narrow, right, to get this all done. So they're getting all the ugly stuff done at the beginning, which kind of makes sense if that's your plan. How big of an opportunity is this? Well, it's 20, 30, 40% off. It's pretty good, isn't it? It's pretty big. And then think about that extra gain will then compound further in future years. So this is a big one. It's a big one. Like a sale basically is a big one as long as you've got some time horizon in front of you. It's a really big opportunity. And that's why I'm running that live webinar for you guys on Saturday, where you can actually learn some hard rules about how we pick great long-term stocks and understand how, well, I don't want to say cheating, but Wall Street is fooling you. And that's why most people don't really get ahead. But once you understand how you can get ahead, bingo. And that's the goal there. Time to take deep breaths, precisely. Tesla's coming back, is it? Well, that's got hit really hard, which makes absolutely no sense. I mean, okay, the delivery numbers were a bit of a disaster, obviously. But yeah, it's okay. It's recovering a little bit. So maybe the day won't be as bad as we thought. What's the QQQ doing overall? It's also recovering a little bit here, which is good. What's the VIX doing? It's still at 26. This isn't over yet. This is definitely not over yet. What about NVIDIA? Got a blanket exemption from tariffs. NVIDIA did basically, and it's still down 5%. Make the world make sense again. What do you think Tom Lee's doing today? I don't know, chewing on pencils? I don't know. Look, you have to always look at like, why are people saying what they're saying? It's popular to say, everything's going to go up by the dip. He also sells an ETF, obviously, so he wants people to feel the market's going to go up, so they buy it. But you can't go against like the key criteria, right? And VIX at 26, why are you buying stocks? No. Could you buy the index today? Yeah, but there's still a pretty decent chance it's going to go lower. So why cause the pain and suffering? You know. Stefan, see you on Saturday. Brilliant. Scott says when we pair the tariffs with government cuts, it keeps stagflation happening. Yeah, but you also need the tax cuts, right? They need to get the tax cuts through, and they need to get some deregulation out there. So they can't just do the negative stuff. They got to get the positive stuff out there as well. But if this is really a move to lower interest rates, it's kind of a ballsy move. I mean, not a popular one, that's for sure, but it's kind of a ballsy one. Netflix is gaining back up. Yeah, and that's another one of those that makes no sense, right? It's just like, yeah, it's Netflix. People watch Why would people stop watching Netflix because of tariffs? I guess, what's this all about? This doesn't really make a lot of sense. I mean, who's going to put tariffs on Netflix? So yeah, this doesn't make a lot of sense. So this is one of those that it's just a bit silly, this sell-off. You were buying the index a week ago. Yeah, I was, but you know, the VIX wasn't the VIX wasn't where it is right now. You know, the VIX was here in sort of sweet land at sort of 17, which therefore is a reasonable place to be. Do I regret it? No. You can't judge work on hindsight. You got to work on the data that's there, and then you act on that. And does that mean it's always right? No. If you want to always win, don't invest. Because you won't always win in the short term, right? Let's talk about it in 10 years. I'm very confident that I'll make money out of those buys in 10 years, right? That's the deal with it. So you have to kind of like judge that. I didn't do any trades because that'd be different. Now, I did sell the VIX when it was somewhere up here, right? So as we come down again, which we will, we'll make money out of that. We've got about 3 positions open on that one. So there's always stuff we can do, but in moments like these, for most people, it's just best to honestly do nothing. And I mean that in the sense of, you know, protecting your money. And you were only nibbling. Yeah, exactly. I was only nibbling. I was just still sitting on a fair bit of cash here. Is the EU going to put tariffs on services like Netflix? They might. They could put tariffs on Netflix or Google or Apple or, you know, streaming services and so on. If they do, the answer will likely be higher tariffs from the US, which will make this worse. It'll make this longer. Smart? Probably not. I think the EU is in a weak bargaining position, and I know my Europeans don't want to hear that, but as an economy, it isn't a great economy. And they are dependent on the US for loads of things, like oil and gas, which is, I think, what the whole Russia conflict is ultimately about, and defense, right? So it isn't really a super smart move to piss off the US completely. So I think probably with Europe, there'll be some sort of semi-agreement, like with Canada and Mexico as well. And Asia, we'll have to see. We'll have to see. Netflix films a lot in the EU. Yes, of course. You know, they collect all those subsidies from the European film people or whatever. Yeah. How's trading volume today? I don't know yet. Actually, I haven't looked. There is, let's have a look at, as they say, QQQ. What's going on here? What happened to my indicators? There's a relative. Something like that. It's pretty big. It's pretty big. There's a lot of trading here this morning. So yeah, people are freaking out a bit, and that's okay. That's what we do. So if you want to come and not freak out and instead turn this into a beautiful opportunity, this is not for traders. This is for people who want to build wealth with long-term stock investing. build that retirement fund so you can retire sooner and better, then I'm going to run something very special for you, which I was literally going to do in about 2 months. But I think now is the time. People feel the pain. People need it the most. So I'm gonna beaver away between now and Saturday very, very hard to make sure I give you guys value. And it's this Saturday at 11 a.m. New York time. You can sign up if you go to felixprehn.com/webinar. I've pinned it to the chat as well. And I'm literally going to tell you why 96% of the stuff you're buying is rubbish, and how to spot the 4% of good stocks, and give you some real hard indicators there so you know exactly what to look for. And my intention is just to help you retire sooner and better and get out of that rat race and the misery of corporate hell, which I've been through, and actually enjoy life and do what you're meant to be doing here, and not get blindsided and hit by crashes, and instead be well set up for it so that your wealth and your family's wealth and your intergenerational wealth and everything you're building will be lasting and will give you the freedom that you guys want. So if you join me for that, go sign up at felixprehn.com/webinar. We'll have 1,000 free spots. I love you for watching. I love you for tuning in. Today, turn off the brokerage and go for a walk.